Hi, good afternoon. Thank you all so much for joining us for today's webinar. We have a great session lined up for you. A reminder before we get started, this is being recorded and it will be made available on community.franchise.org later this evening. As well, if you have any questions for our speaker today, please drop them in the questions box and we'll get to them throughout the session. So today's session is the future of money, how customers will pay, and it's brought to us by IFA's preferred vendor, Franchise Payments Network. FPN is preferred vendor for electronic payment merchant services and loyalty programs. And today to walk us through the content is Tom Epstein. Tom, I'm going to kick it over to you.
Thanks, Caitlin. I appreciate it. And thank you for everyone who's attending. Just at a very, very high level, I don't want to bore anybody with too much stuff, but I am Tom Epstein. I'm the founder and CEO of Franchise Payments Network and Pollinate, a loyalty platform. And in the background, I may defer to Hassam, our CMO, on occasion. He's advancing the slides for me and making sure that we stay on time target, but he'll also assist if you guys have some sort of marketing type question around payments or something that I stumble with. He's here in the background to help us as well. Again, Caitlin will be fielding any questions. So there will be a section of Q&A at the end of this, but if you have something burning question that goes along with whatever slide that we're on, feel free to type it in, and Caitlin will stop us all, and we'll try to get that answered for you at that time. Go ahead, Hassam. Just a very quick quote that we put in here: money often costs too much, from Ralph Waldo Emerson. And one of the slides later on in the presentation, you're going to see exactly what we're talking about there as we kind of go through things. So we'll keep going now. Okay, so before we get into where is money going and where is currency going, I kind of played off of a presentation I did about 2 years ago at MITCon in Austin, when we talked about the evolution of money at that time. And we used this graphic here. This is a piece of artwork that was done for me by a friend of mine, Josh Lightoff, transparent artist. And he calls this the evolution of money. And if you're looking at it, and actually if you're looking at me, you can see the actual painting behind me. I have it hanging in my office. You can see where money has taken a different approach all the way through history. And, so we started out with commerce being mostly the barter system, where people were trading in goods and services, and there was no actual currency, but they were trading in barter. And if you see like the white around the top of it, he's representing the salt trade there. And people were basically traveling, all through the Mideast and the Orient and trading in salt. They were trading in other goods as well, like barley and things like that. And you probably heard the term a shekel. A shekel is not actually a size of currency, but it's a weight. And everybody was weighing what they were. What is a shekel? How much salt in a shekel? And so they were weighing things that way, and they were trading based off of that. Around 1000 BC. You see in the concentric circle, people started using coins. And at that time, it could have been made of clay. It could have been made of bronze. The first people using coins were in India and China. Around 700 BC, the Greeks started taking things up a notch and were using gold and silver. And at that point, we really kind of went on like a gold standard, where the coins were valued based on the weight of the gold or the silver that was part of it, right? So that's how we kind of got onto that trade, to where it became more of a universal form of currency based on the weight of the coin that was offered for the payment. And you probably see in old movies or something where people are actually weighing coins in these weigh things, to see what that coin is worth. Around 700 BC, we did the 700 BC was the gold and silver, and then it kind of carried on at that level until around 1100 AD, when China was the first country to introduce paper money. And again, even at that point, the paper money was tied to a promissory note that became, even more prevalent around the 1400s when England and other countries like that started using promissory notes, but it was a promise toward a certain amount of weight of gold. So everything was tied to a precious metal. And then in the 1700s, we started getting into banknotes, where people were actually writing checks and against what they held in their bank accounts and those sort of things. So we were really on like a gold standard and promissory note and all of that, all the way up until about the 1930s. In the 1930s, the United States started moving off of that gold standard. And, we had to move off the gold standard. Roosevelt was dealing with the Great Depression, and we really didn't have enough resources at that time based on the value of gold to help get us out of the Great Depression. And then in the 40s, start preparing to go to war in World War II. We needed more money in our reserves and more money to deal with. And so that's really when Roosevelt got us off of the gold standard. And in God we trust, and those sort of phrases on the bills were then being presented so that they could basically do what they're doing today, print as much money as they need in order to pay for the bills that they need to get us where we are. And a lot of people have said that getting off of that gold standard is one of the main things that got us out of the Depression, because we basically bought our way out of it through the federal government. But then also, it ends up putting us in an inflationary standpoint where you're printing too much money, and now the value of that money is going down. So those are the things that we've been dealing with ever since we went off of the gold standard. And then in 1971, we completely severed the relationship between money and gold and silver. Up until that point, foreigners or even US citizens could actually cash in, a silver certificate. Was it for $1? They could cash in a silver certificate for $1's worth of silver. And you think about, I know when I was growing up, that we learned a lot about Fort Knox and how much money is in Fort Knox, how much gold, how much silver bullion and all that. We really don't know, right? It's kind of a very well kept secret how much is actually there, but we do know at this point there's probably not enough there to cover, if we were to be back on the gold standard, to cover if somebody were to return all those paper bills for that gold. The other thing that was going on side by side during that is, if you want to advance, Hassam, that was going on side by side with that is the evolution of payments. So right around, I don't know, if you get back into like 1960 or 1950, you have Diners Club introduced their first true credit card. It was on cardboard credit card. And then in around 1966, you have Master Charge. They came out with their credit card, but it was predated. In 1958, Bank of America came out with the Bank Americard, which grew into Visa. So we started moving into a new form of currency around that time, which is more toward the center, where you're talking about electronic currencies, to where you're making a payment against the credit limit that you have set, and of course you have to pay that back over time. But we also had an evolution of how did payments actually take place. If you see on my left-hand side, I guess, I don't know how it presents on your screen, but on my left-hand side, you see that cash register. That's an NCR cash register from like the 1860s or something. It's not mine, but I had one almost identical to that, and it's still at my mother's house. When I opened my first surf shop, it was like over in the corner, as a conversational piece that I had. And that's the way transactions happen, cash in the drawer, hitting the number on the little keys there and doing that. When credit cards came out, it was all a manual process. So, again, I go back to my memories of owning a surf shop in the 1980s. And when somebody would come in with a credit card, I had this little magazine that Visa MasterCard would send me once, probably twice a month, maybe once every 2 weeks. and it was a list of every credit card number in there that was bad. So the people that weren't paying their bill, their number was in there. Their name wasn't in there, but the number was in there. And when somebody presented you with a card, you had to look it up in the book to make sure it was good, because nothing was electronic. And then if it was good, you'd put it in one of these little things called a knuckle buster, that second picture there, and you'd slide it across, take an imprint of the card, you'd put it in an envelope, you'd fill out a deposit slip just like you do for checks, and you'd send it to the bank. And maybe about a week later, you would get the deposit into your business banking account, if you're lucky, usually about a week to 10 days. And you would be charged something around 4 to 5% for that. Right now, if you're charged 4 to 5% for a credit card transaction, you're really, really mad, and you're looking for another credit card processor. So that's not the case anymore. Then they moved to, it was probably in the 90s, where you saw these little Zon Junior machines everywhere where it's electronic and you just swipe the card. And then with the MagStripe technology in the 90s, so you swipe the card, it has all of your account information embedded on that magnetic strip on the back. And then it moved to more of an overnight transaction, to where you were funded for those transactions within 1 to 2 days, depending on your banking relationship. And you knew right away whether that card was good or not, because it would go and check the balance on the card. So we had the ability to get rid of those books. And then in about the late 90s, 1996, 97, EMV chip card technology first hit Europe. It's kind of crazy, right? That technology has been in Europe for almost 30 years now, and it's just now hitting the United States. That's how far behind the United States is against the rest of the world and a lot of this stuff. But now you have the smart chip technology where the transaction can be tokenized, and it makes it very, very difficult for a hacker to get in and get that information. We here in the United States, I think we still have adopted it in a manner that is not as good as Europe. Europe will usually do what's called chip and PIN, where you dip the chip in the machine and then you still enter a 4-digit PIN number. Here in the US, primarily, I mean, there's a few places that do chip and PIN, but mostly it's chip and signature. And so you just dip the chip in there and you just go. I mean, you just sign for it. So to me, it's still not as secure here in the US as anybody could do that, steal your card and still be able to do that. And then we're starting to move more and more into some more touchless type technology. In 2005, RFID, which was something that retailers had used for many, many years to track goods from being tracked. Maybe they shipped over from China and they were tracking it on the boat all the way through the docks in the US and into the bay at their store, and did it make it into the store, and track that, whatever. So it now became a vehicle to also use for payments, to where you can just move your card with the chip close to the credit card machine and you don't actually have to touch it. Apple Pay came out in 2014. So that was RFID from your phone. So you didn't even have to take your card out anymore. So you linked your phone to your Apple Pay account or your card to your Apple Pay account, and you can make a transaction without even taking your wallet out of your or taking a card out of your wallet. And all of these things really did not, all of this touchless transaction stuff really did not take hold in the US. And we talked about all of the technology that's available. We went pretty deep into that in 2019 at that presentation that I did. And we talked about all that technology that we could be using that we're not using, or that we're very slow to use. And we talked about, the advantages of using it as far as safer transactions, quicker transactions, and being able to manage, your finances better through the wallets and how it accounts for your spending and all of that. And it just never really had taken much effect in the United States until COVID hit. And then when COVID hit, retailers, restaurateurs, anybody, even service industry people we're really, really looking for ways to ease that transaction contact for the consumer to where everything is going touchless. And so we've seen over the last year and a half, a very dramatic and very quick move to this touchless transaction, right? So, we spent the last, and I say we as an industry, really, everybody in the payment industry spent the last year just very rapidly helping merchants to deploy these touchless transactions and grow that as part of their base. We're currently looking at transactional histories, and we're seeing year-over-year increases with our current customers that are in our portfolio, and taking a look at it and trying to figure out, are they actually doing more business, or are they just really doing more business on credit card or electronic payments, and they're still staying in the same business realm. So we're still trying to see how all that shakes out, and I'm sure we'll have more information through the IFA on that very, very soon. And then you can, yeah. So what's next? So what are we really, really looking for, as we go forward into the payment space? One thing I didn't mention on the timeline is Bitcoin was introduced in 2008. So next slide, Hassan. So, when we take a look at, the different types of payment forms that are out there now, we're seeing a couple of trends that you guys might want to be aware of and might want to be looking at as we move forward. And then we're going to get into, some of the technology as we go. One of the big things I've been seeing over the past probably 6 months is this idea of buy now, pay later, BNPL. And basically it's being able to finance a transaction. If you're a QSR and you're selling ice cream or hamburgers, you're probably not going to need this too much. But if you're selling a big ticket type item, I would think anything over $200, $300, $400, you start getting into the area where you might want to be looking at this. And it's become such a big trend that there are certain companies out there that are actually making big investments into it. Square just bought Afterpay. Apple has bought a couple of venues to be able to do it. So, this is a big thing that's going on where the consumer can go in, mostly e-commerce, and decide that they want to purchase an item, and then they can pick buy now, pay later. And they might, if it's $1,000 item, they might pay $200 right now. And then the software on the back end automatically sets up the payment schedule for them to make the rest of the payments. Let's say it's 4 more payments of $200 over a period of 2 months. It automatically makes those payments for you, for the consumer, and then pays the merchant. Obviously, there's a fee for that. We're showing Klarna on here, but there's several different companies out there that can integrate into your shopping carts and do that for you. The fees usually range somewhere around the same as a credit card fee to do that kind of financing. Somewhere around 1.5% is what I'm seeing most of them do. The other thing that we're seeing a lot of is surcharging. It's a method that used to be, I don't want to call it illegal. I don't know that it really was illegal. There may be a couple of states that find it illegal, but it used to be against, I should say, Visa, MasterCard rules. And about 2 or 3 years ago, they eased up on those rules. So now what they're doing is they're allowing a merchant to pass through what their average merchant processing fee is to the consumer, but you have to disclose it. So it has to be disclosed at the point of sale. So if you're invoicing a merchant or invoicing a consumer for a goods or service, you have to clearly have that line item and tell them that that's what you're going to charge them in addition to all the other fees that you have. And it has to be on the receipt, and it has to be, the amount. This one I haven't seen too much of in this graphic. We show a COVID surcharge, but we've seen over the last few years a lot of different surcharges. When the minimum wage increase first hit California, a lot of the QSRs added a labor surcharge to their receipts. Well, now Visa and MasterCard is now saying you can also add a surcharge for payment processing. it just can't be more than what your average or your effective rate is. So most people are okay around 2%, 2.5%, depending on the type of business that you're in. There are countries where this has been in place for quite a while. Australia, for instance, pretty much all the merchants do that there. So the consumers don't really even think about it. In the US, it's very, very new. And I don't know of any franchisors who have adopted this as this is the way to go. I think most big chains are kind of on the back seat on this and saying, look, let's wait. We don't want to be the first guy on the block to alienate our customers by having an extra fee on there. But as more mom and pop businesses do it, it's probably going to be more acceptable and something that we may want to talk about in the next 2 to 3 years as a way to help offset some of the costs of doing business for your franchisees. Okay. All right. So as we start getting into, what a transaction really costs, and why would we think that, we might use other forms of currency like crypto for business. Let's take a look at what it really costs, what your cash is really worth here in the United States. As you're looking at, what does it cost to make a penny? A penny costs 2.4 cents. So every penny out there costs almost 2.5 times the value of that penny to make. A nickel is 11.2 cents. You don't really get to a point where you're actually above water until you get to the quarter, which is also 11.2 cents. When you're talking about currency, a $1 bill costs 5.4 cents to make. A $100 bill costs 15.4 cents to make. So when you start thinking about like dollar bills and what they cost, so you've got a dollar bill, you think it's worth $1. It's not tied to anything. It's not tied to the gold standard. It's not tied to silver, like a silver certificate. It's the value that you see in that dollar bill is really just the value that you have placed in the federal government. So the government has said, we think $1 is worth X, and you're going to sell a snow cone for $3 or whatever it is. So it's 3 of these things, and that's what you think, the value of that dollar is, and it's just tied to that. There is no anything keeping you to like a gold standard. It's worth an ounce of gold or 5 ounces of silver or whatever it is. So when you think about it, since we've been completely off the gold standard since 1971, if you really think about where we are today, we are already in crypto because it's just an old-fashioned form of presenting something, which is just paper. And the reason why the $100 bill is more expensive is it's got a lot more security in it as far as watermarks and security bands built inside of it and all of that. But even at 15 cents, it's certainly not worth $100. So it's your faith in the federal government that makes that $100 bill worth a $100 bill. How is that any different than your faith in a Bitcoin, knowing that a Bitcoin right now is trading for somewhere around $46,000? How do you know it's really worth $46,000? You own a Bitcoin, you own it in your digital wallet, but it's not even a physical thing like a $100 bill. It's a digital currency and a digital wallet. And your faith is that, hey, today it's worth $46,000 or whatever it's worth, right? So if you could advance, I think you can advance one more because I was kind of talking about everything on that same one. But so, my whole thing is it's really just whatever it's worth to you. At MITCon, I took $50 out of my pocket, $51 bills, and just threw them into the audience. And if you think about that, you think you're losing $50. I lost $2.50 by doing that. That's the cost of those $51 bills that I threw out there. And the only value to that is what the person who received it thinks it's worth based on their faith in the US government. Okay, so crypto volume. So as we talk about crypto as itself, as we move forward, and again, the very middle of the evolution of money, we have the B for Bitcoin, but it's really crypto. And it's not just Bitcoin. We're going to talk a little bit about that today as well, and talk about, is crypto only for investors? For the longest time, it really has only been an investment tool that most people looked at and said, look, I'm going to buy some Bitcoin and I hope it's going to go up in value. And it has, right? It's gone up drastically, from 2008, if you would have bought, at 30 cents or whatever it first came out at, and now it's worth $46,000 of Bitcoin, you'd be a pretty happy person right now if you held on to it. But it's not just for investors. At the end of 2020, so December 31st, 2020, there were 100 million users of digital currency. 100 million people. At the end of June 2021, there was 220 million people using Bitcoin. A lot of that was, or digital currency, a lot of that was driven by the hype of, the rapid rise over the last 6 or 7 months of the digital currency. And there's a lot of reasons why you could think about why it did raise so quickly. With inflation fears on the rise, again, you get back to, if you keep printing money, the value of that money is going to go down, right? And I'm not just picking on the US, a lot of countries do this to pay their bills. They print more money to pay for their infrastructure bills like we have right now. They print more money to help with the economy, especially during COVID and all that. Well, when you talk about cryptocurrency, there's only so much that's going to be mined of that particular currency, whether it's Bitcoin, Ethereum, Dodge, whatever it is. There's only going to be so much of it mined. So it's always going to go up in value. Yeah, we're going to see dips and valleys, but it's always going to go up in value. 13% of all Americans have traded in Bitcoin at some level or not. They've either bought Bitcoin or they've traded it or they've sold it or whatever. 13% of all Americans have done something around crypto. When I say Bitcoin, I'm kind of, I mean crypto there. 53% of all Americans have been in the stock market at some point. That's down about 5% over the last 10 years. So where is the additional money going? It's going into probably real estate as well, but also into cryptocurrencies. So as we move forward, people are seeing different ways to invest in the money. Right now, there are about $110 billion worth of crypto transactions happening every single day. $110 billion. 70 million crypto wallets out there right now. So when I say crypto wallet, I mean something specific to crypto, whether it's a Coinbase or somebody like that. So if you think about that, the volume that you have out there, it's a currency that is well bigger than a lot of other countries even might have. Next slide, Hassan. So with all that transactional volume going on out there, why can't it be crypto at the point of sale? Right now, we do have people taking crypto at the point of sale. There's our favorite shark with the Mavs. You can buy Mavs tickets from their website and at the box office with crypto if you like. There's a real estate agent right here in Orlando that will exchange crypto for real estate, both residential and commercial. So we're seeing more and more people moving toward that. The thing that's kind of kept people away from doing crypto at the point of sale is the volatility of it, right? So when you think about, the transactions that are actually happening at the point of sale, so obviously Bitcoin is the one most people know. Bitcoin does about 250,000 transactions a day. That's a lot, right? But it's not a lot when you think about how many people are in the world and all the countries that people could possibly be using, Bitcoin as a tender at the point of sale. Ethereum does about 1.1 million transactions per day. And so why is that? Why is Ethereum, who is valued somewhere around $3,000 a coin today, versus Bitcoin that's $46,000 a coin today, why do they have more transactions and why are they more used? because Ethereum has been built to be a commerce platform, and they link in through other what they call stable coins, like a Stellar or the USDC coin, which is named as Circle. And so what these stable coins do is act as an intermediary between, say, a Bitcoin and an Ethereum or somebody else that you might have, and stabilize that to the US dollar, to the value of the dollar, so that when the transaction goes through, it actually goes through at the fractions of the Bitcoin that represent the right amount for that particular time at that particular day. So it's real-time currency exchange, if you will. I mean, right now we have currency exchange when you go to the airport, when you land in another country. You're exchanging it for what the exchange rate is that day. Through the blockchain and through using these stable coins, we have the ability to do currency exchange between Bitcoins or between crypto real time based on what that coin is worth at that particular second that you did that transaction. And so that's what's stabilizing all of that for everybody right now. Next slide. So what's the US doing? So the US is thinking about, and you've probably heard it as part of this new infrastructure bill, where they're trying to set aside some funds to launch and move forward with what they want to call the Fed coin. And so the Fed coin would be a centralized crypto that's managed by the feds, by the US government. This is what China's doing, and Great Britain is also doing it, and a couple of other countries are doing it. And so the technology is there to do it. The current currency is already basically Fed coin 2. We already talked about that. So it's not going to be that much different than what we already have. The challenge is obviously, dealing with the feds and how quickly they can move and how quickly they can get this done. And will the other crypto platforms allow the Fed to play within them based on, the security that the Fed would have? The downside to a centralized crypto like the Fed is now it's in the Fed's hands, right? And they will be tracking who's spending, where they're spending, how much they're spending. So you have all that data that is in Bitcoin that never gets shared, that the feds now have. And one of the attractivenesses of buying into Bitcoin or Ethereum or one of these other cryptos is the feds can't track that. It's not taxable. You don't know what's going on. Capital gains, they're already talking about capital gains tax on if your investment in crypto goes up. So there's all these different things that the feds are trying to capitalize on by having their own coin. I'm not sure how that's going to work out. It'll be fun to kind of watch and see whether that gets any legs or not. I know China's trying it, and I know, as I said, the US is looking toward it. We might be 3 to 5 years down the road before we can really get there, and Britain's looking at it as well. Next slide. Okay, so why do I want to talk about El Salvador? El Salvador is really adopting what's called DeFi, decentralized finance. So up until this year, September 7th, El Salvador has been basing their economy on the US dollar. If you live in El Salvador and you go into a market in El Salvador, you're a citizen of El Salvador, you're paying with US dollars. They don't have their own currency today. They've never printed it. Well, I don't say never, maybe historically way back they might have, but right now they're on the US dollar. So all of their citizens are carrying US dollars around. September 7th, they are moving their national currency to Bitcoin. It's all going to be decentralized. So it's a experiment that I think everybody is watching. The leader of El Salvador is a young, very progressive person who understands technology. He's trying to move El Salvador into the future. They've traditionally been a fairly poor country, and they are looking at this move, and the citizens of El Salvador are looking at this move as a way for them to gain almost immediate wealth. And when you think about it, 6.5 million citizens of El Salvador on September 7th will now be new owners of Bitcoin, right? So that 220 million that I said before, in one day it's going to go to 226 million, which has to increase the value. So I think a lot of people down there are thinking, well, if we move from the dollar to Bitcoin and Bitcoin continues to go up, let's say Bitcoin goes up 30% in a year, well, all of a sudden the people of El Salvador will be worth 30% more. Right now, the average salary for someone in El Salvador is around $41,000. Is it going to now be worth more, that $41,000, because on September 7th or 6th, it converts over to Bitcoin? That's going to be something that is going to be really kind of exciting to watch and see how that plays out and see how many other countries follow suit. I think that there's a big push in some of these underdeveloped countries to use cryptocurrency as a leapfrog over whatever economic system they have in place right now. If you look at, where the most crypto is used in the world, the number one place where crypto is used is Japan. Number two is the US. Number three is quite surprising. It's Nigeria. Nigeria is it's the country where the third most amount of crypto is actually being used on a daily basis for purchases. Why is that? I mean, you would think of them as kind of a third world country. And by per capita, it's number one as far as the use of crypto. And it's because they just leapfrogged technology over somewhere else. Nigeria is one of the highest producers of gold in the world these days. That's where they get most of their wealth from. But the majority of the people don't live in high-tech centers or whatever. So they built an infrastructure around mobile. And so everybody has a mobile wallet there. And they're already doing mobile transactions at the local pharmacy or at the market or wherever they are. And they're all enabled with crypto at this point. And they're all buying and selling in crypto. And it's fractions of crypto, but it is crypto. So that's kind of where I'm seeing, the future go. I mean, it's not just about the technology, it's also about a new form of currency. So we talked about, the technology being changing. And the way I see it, technology changing, whether you did that knuckle buster to run your credit card, or whether you're now using a wearable like a ring or like an RFID thing on your glasses or something, that you're doing, that we see Disney World. If you go on a cruise or go to Disney, they've got the RFID bracelets that track everywhere you go, but you can also just wave your bracelet in front of the POS and it charges your account on file. And when you leave, your credit card gets dinged for that amount of money. That's just technology. So that technology doesn't really change anything other than how you're processing the transaction, but it's still going through the same way as we did when we were doing the knuckle busters. It's just making it easier and making it touchless. And, I don't know, I'm not, a prophet. I don't know what's going to happen with COVID, but my sense is it's going to be around forever, just like the flu. We're going to have different strains of it. So people at this point want to pay differently to where they're not touching things. They don't want to touch cash. They don't want to touch your check. They don't want to touch your credit card. They don't want to touch anything, but they want your money, right? So we have to make it easier for them to do that. We're using technology for that. That's going to continue. There's always going to be something new around technology that none of us have thought of. I personally think, though, the future of commerce and the future of where money is going to be into decentralized finance, to where you have these cryptocurrencies and you're going to start seeing them more and more and more at the point of sale. Companies like NCR have built it into their point of sale now. And if you don't already, if you have an NCR cash register, if it needs a software upgrade or something like that, I'm sure that that's available. You'll be able to accept crypto through that. Visa, MasterCard have done APIs into quite a few of the crypto networks in order to make it possible to do it through your wallet. We talked about Apple adding crypto. So the way I look at it as a payment processor is we just now have embarked on a new tender type. So it's no longer just Visa, MasterCard, Discover, American Express. ACH is gaining ground, but we now have crypto, and we're building crypto in as a payment type. And you're going to see over the next couple of years, with any setup that you have with probably any credit card processor, you're going to start seeing that option to add crypto as a form of payment. Next slide. So just a shout out to my friend Josh. He graciously lets me use, whenever I'm doing a talk on currency or whatever, he graciously lets me use his artwork as a backdrop. So Josh is the guy with the beard with the blue shirt on. Excellent artist. I invite anybody who loves great art to go to his website or Instagram page. It's listed there, and check him out. Really cool guy, great artist. And thanks, Josh. And then if anybody has questions, I'm happy to answer anything for anybody. Have you got anything, Caitlin?
Yes, we have a few questions.
Okay.
So first one, should we be comfortable accepting all or some digital currencies? How can we pilot this in a safe way? And can FPN help?
Well, the answer is no. You wouldn't want you wouldn't want all currencies. I don't think anybody has a wallet yet that accepts that. What typically we do is we do an API, and so like NCR has done an API to a specific wallet platform that allows certain currencies to be in there, and it's going to be the big ones: Bitcoin, Ethereum, EOS, Stellar. So it's going to be some of the bigger ones. I'm still looking at some of the very smaller ones as investment vehicles. If somebody breaks through, then they might be the next Bitcoin that goes from 30 cents to 46,000. I don't know. I'm looking at more of the the technology guys that enable the coins to like we talked about Stellar being a conduit between the other forms of Bitcoin to make it work. But yes, and yes, we can help you to accept coins, Bitcoin. But it would be, we would have to work with your point of sale vendor. We're not a point of sale vendor, so we need to work with your point of sale vendor to make sure that they have that ability to do it. Eventually, it's going to be ubiquitous because there's going to be a lot of it in the next, I'll give it 6 to 9 months when some of this stuff will be riding on the Visa MasterCard rails. I don't know if you guys remember, we talked about Diners Club, right? Probably 6 years ago or something. Discover bought Diners Club, and when they did that, you no longer needed to have a Diners Club entitlement in your credit card processing machine. That Diners Club now rides on the Discover network rails, so when you swipe your Diners card, it's actually going through the Discover platform, but you can still use your Diners card, right? So I think it's going to be very similar to that in the future, but right now it's requiring that integration from the point of sale to the crypto wallet.
Okay, and this one just came in, which I think is bouncing off what you talked about. How does Square and PayPal that are into crypto play into what you're talking about?
So Square, I don't know as much about their strategy as I do PayPal, but PayPal is like into every possible form of payment that they possibly can get into, and they've made investments in everything across the board. So not only are they enabling the use of paying with crypto through PayPal, I don't have it yet, but I think we'll probably see that again probably within a year, that when you go to pay with PayPal, there'll probably be a thing on there, do you want to pay with Bitcoin or not, right? Right now you can go into PayPal. If you're on an e-commerce site, you go pay with PayPal. Even if you don't have a PayPal account, you can then pay with your credit card through that PayPal account, right? So I think that's how they're going to enable that very quickly. Square is just now making investments into things like the buy now, pay later thing. So they're making investments into there, but it's really even at the upper level when you start seeing people like Elon Musk and Jack Dorsey and these guys that are on the board of all these companies that are investing their money into the crypto, and they're kind of playing with the market a little bit, you know, with their announcements that this is not going to work or this is going to work or we're going to take it with this company or not that company. And they're really driving the value of the crypto up based on their investments and what they're doing. I still think they kind of see it as an investment tool. I think it's really going to be us here on this call that are really looking at making it a payment tool and using the platforms that those guys have had to build to make that investment worth it, where we're starting to use it as a payment tool. Already, I don't know how many people have started, you know, traveling again, but already if you're out and about, especially if you're in like Las Vegas and you're walking through a casino, you see Bitcoin ATMs. So you log into the ATM with your wallet and it'll give you cash back based on how many Bitcoins that you have, and you can take fractions of Bitcoins out. So I think right now, the last time I checked, there was somewhere around 60,000 Bitcoin ATMs in the United States already deployed.
Oh, wow.
And if you think about that technology for the Bitcoin ATM, it's the same thing at the point of sale, right? So we're using that same software to check your wallet, see how much you have in whatever coin you're talking about, and convert it in real time to whatever the American dollar is worth, and giving you that value toward that purchase or giving you cash back.
Oh, interesting. I haven't seen them around. That's interesting. Going back to something else you said about surcharges. The question is it ever illegal to have these surcharges like COVID? Now that I read that, I'm not sure.
Yeah,
do you understand that?
Yeah, I do. I 100% understand that. So
Great.
different states have different laws around surcharging. So I would highly recommend you take a look at what your state allows. I don't think too many of them are going to allow that COVID surcharge. There were several that allowed a surcharge due to the minimum wage increase that we saw like in California a few years ago. I think we'll probably start seeing more of that. To my knowledge, I think I want to say there's 5 states in the United States that don't allow surcharging at all, but the others do at some level. So be careful where you are. So I wouldn't make a blanket statement to all of your franchisees that it's cool. We need to make sure that we're paying attention to the local laws as well.
All right, and then back to crypto. We frequently see news reports of crypto scams and meltdowns of certain forms. How can retailers be confident that they are receiving a stable payment form with recognized stable value when accepting crypto?
Yeah, well, so that is kind of the thing that crypto is really designed to do, was to add additional security to the value of that coin and make it a little bit harder for fraud to happen. So if you think about how easy it is to get somebody's credit card number or their banking account number, those numbers are everywhere, right? You know, and you got to watch what you throw away, because you might be throwing away a bill that has your bank statement number on it, right? Or from your bank or whatever, and you're having to truncate those numbers, or you're having to shred all that. With crypto, your account number doesn't show up anywhere. And the biggest problem around that is don't forget how to get into your wallet, because I've heard horror stories of people having a wallet with significant amount of money in it and then forgetting how to get into it, and they can't. It's gone, right? So that's the biggest problem. There was a situation fairly recently where a very significant amount of money did get hacked out of a cryptocurrency, and it was caught pretty quickly. And the blackmailers who got away with the money ended up getting blackmailed by the platform, saying, we know where you are, we know what you're doing, we know all this stuff, we've frozen all your assets in all these other countries, we have a way to get to you through the government. Like, they have it all. And the person that stole the money, it was something like $60 million or something. So the person who stole the money actually returned it all. And the platform gave like 10% back to them and called them a white hat now, because now they taught them a new way to get into the platform. and they basically hired these people to constantly do threat analysis to see if they could break into the system again. Interesting, but it really is a safer form of transaction than you'll get just with your credit card or an ACH or even cash. You think about you carrying cash around, you could be robbed, right? So.
Right. Yeah, I was hearing a story the other day about a guy who threw away the laptop with his codes to get in, and he was offering a bunch of money to for the state to come help him search at the dumpsters for it.
Yeah.
So it's definitely secure if you have to have that.
Yeah, I mean, look, if you lost your login, your user ID and password to your Bank of America or Wells Fargo account, you could probably recover that, right? You could call customer service and they find a way to help you, recover that and get back in. You lose it to one of these Bitcoin wallets, you're out of luck. So
yeah, it's a little scary in that form, but again on crypto, what about government regulations related to crypto?
Well, so that's where we are right now today. So like the governments are really trying, or the US, I should say, every government has got their own little plan for it, but in the US, they're really trying to wrap their arms around it. They see it as a threat and an opportunity. The threat being that people are going to be using crypto more and more for transactions, big transactions like the real estate broker that I told you about. And they won't see that transaction, so they won't be able to get their tax dollars. They won't see the capital gains, if you're making a big investment. If you make a big investment in the stock market and your stocks go up, which we hope they do, that's capital gains if you ever sell them, right? If you make a big investment in crypto and the crypto raises in price, but nobody has access to your wallet and knows how much you did and what it's worth, there's no capital gains, right? Nobody really knows what you're doing there. So the governments are very, very interested in figuring out a way to get a hold of it. And that's why they want to introduce FedCoin and try to convince people to do that until they can figure out how can they work with all these different platforms to report this back to them when the very nature, the reason why they're in business is to not report to the government. So the El Salvador thing is going to be really, really interesting. I think El Salvador is coming up with a way to not tax, but get a transaction fee from Bitcoin on every transaction as a way to pay the tax on it. But there's really no way to track everything everybody's doing because it's built not to do that. And so, but if it builds wealth in a nation, I mean, you think about, the tax structure in, even in the US, every state has a little bit different tax structure. And there are some states that are better from a tax standpoint than others. Florida and Texas are ones that don't have like state income tax and things like that. They make their money at sales tax, right? So if you go in and you buy something, you buy that snow cone, there's a sales tax that the merchant charges you that they pass on to the government, right? Well, if all of a sudden the economy in El Salvador goes up 20, 30, 40%, whatever it is, based on the increase in Bitcoin, the thought is now those citizens have more money to play with and they're going to spend more money and they're going to get their tax dollars based off of the actual transactions being spent.
Keeping on crypto, and I'm not sure if you have this answer, but given the secure and non-transparent nature of crypto, how is the U.S. government able to recapture some of the money lost in the colonial pipeline hack? Do you know?
They don't.
They don't. There you go.
The federal government, I'm sure they're going to find some way to get their hands inside of everybody's pockets, but that's just, it's not going to happen. I mean, because of the anonymity that is there based on those transactions. So it's built to protect you against that kind of thing. So.
And then we have two more back to sort of, business payments and such. How does MasterCard doing away with their magnetic stripe affect things?
Okay, so yeah, MasterCard in the United States probably won't be getting rid of the actual putting this mag stripe on the back of the card until 2030 or something of that nature. But every MasterCard right now has the chip on it. Mm-hmm. So, I mean, it's just a phase out. We're no longer deploying POS, standalone credit card terminals that have magstripe anyway. So it's just gonna eventually just die, right? The only ones we're sending out right now are the chip card readers, or chip card, NFC, and all that. So, if you think about the life of a card itself, how long is it gonna last in your wallet, or when does it expire? It's 3 to 5 years, right? So if you got a card today in 2021 and it's got the mag stripe on it, when you replace it in 2026, it probably won't have one, right? MasterCard's saying they will allow that transaction to go through, but they're already charging the merchant a higher amount if the card has a chip on it and it's taken as a mag stripe. So it downgrades to a higher interchange rate because MasterCard and Visa see that as a higher risk than the chip card. So they're already downgrading it. And if you're in a situation where the customer wants to dispute it, you're not going to win that charge back. If you have a mag stripe, the chances of winning that charge back are almost zero, because if the card had a chip on it, you should have used it as a chip.
Okay. Interesting. Final one. What are everyday things I can do to ensure my business minimizes exposure to transaction fraud and data breaches?
That's another seminar I think we could go into for another hour. But it's just, best practices at the point of sale. I mean, paying attention to what you're doing and making sure your customer service people or cashiers are making sense. The technology that we have in place pretty much makes it almost no-brainer, but you want to look at the card, make sure the name on the card matches the person if you have that type of situation, where you have their ID out if you're purchasing alcohol or something of that nature. You want to make sure that the signatures match if you can, that it's pretty close to that. If you are taking a transaction and the card isn't present and you're doing at home or in your office and you're punching in the card number, don't write that card number down and leave it on a Post-it note sticking next to your desk, or write it down on that same Post-it note and just throw it in the garbage can, and the garbage goes out sometime and you don't even know it. I can't tell you how many times we see that. If you're a guy in a truck and you're out doing service and you've got that little invoice, that metal invoice thing that they all seem to have, and they're writing stuff down and they're writing credit card numbers on it and they're calling it into the dispatch person to do it. Let's not do that anymore. That's bad stuff, right? You can have a mobile reader that Bluetooths to your phone. It's very secure. Or it could be an account on file that the home office has, and they can just ping that card that they've already, if it's a regular customer. Lots of ways to do this. New technologies that we've been really pushing since COVID is, for those types of situations, is we can text a payment link to the customer that says, hey, we had a $100 thing, and let me just text it to your phone. The customer gets the text, they hit the thing on their phone, it pulls up the payment page, they enter their credit card stuff right into the gateway, so it's secure. Nobody sees the card number, and off it goes. So you can do text, you can do email, and all of that stuff connects to your accounting system, so it automatically populates to QuickBooks or Xero or whatever you're using. It all just works, and we've seen a ton more of that since COVID. So, a lot less checks are being taken out there, a lot less cash is being taken out there. And that kind of goes back to, an earlier point where we're seeing like 30% increase in volume this year over, say, 2019. I don't really look at 2020 because that was a problem year for everybody, but this year over last year, and or over 2019, and I'm wondering about those same store sales. Is it really like they're doing better, or is it because they're running more transactions electronically than they were before? And it might be a little bit of both, but I'm curious, and we're going to be starting to do some studies on that, and hopefully working through the IFA to present some of that data as well.
Awesome. Well, that is all the time we have. Tom, thank you so much for your time today. This was very, very interesting. Thank you all for attending. Again, this was recorded and it will be made available on community.franchise.org later today, along with the PowerPoint template. Tom, Hassam, thank you again. Franchise Payments Network, thank you so much. And everybody have a great rest of your day.
Thanks, Caitlin. I appreciate it.
Bye.
Bye.